Hi traders, hope you're having a fantastic Wednesday. This is the full market analysis for the 5th of June. And as per usual, we're seeing the US dollar not doing much pre non-farm payroll, but nonetheless some great news on gold. So I want to go into that before I do the full analysis and go into the price action charts in particular, because this is the perfect time to be having the price action charts, because they make a lot of money in these kind of situations. So before I do that, let's go into gold. I want to explain a little bit about hidden divergence. This is something that can be a little bit tricky to understand, because we understand negative divergence. So let's do that first. So this is where, for instance, the price is achieving higher highs and there's negative divergence. That indicates that the price is going to fall. And vice versa, if you see a position, I can't see anything there at the moment, but usually when the price is achieving lower lows and high highs, then there's a reversal, a bullish divergence as they call it. Now the hidden divergence is a little bit unusual in that, let me just give you the scenarios we've had in the last 24 hours. So this was the move last night. And so we could see that the price is achieving higher highs. Yet we're seeing that the CCI, which is my preference, any kind of momentum indicator will do. This is achieving lower lows and that's achieving higher highs. So this is simply a pullback into support and then away it goes. So that's the theory. So have a look at this morning as the price came down, still achieving higher lows, which is important. However, you can see that the CCI is achieving lower lows. So that's hidden divergence, and that tells you that the price is going the wrong way. So it's trying to grab the sellers into the market, and then once the sellers start selling it, then snap, that's when you will get stopped out. So we will actually take this trade. Don't even hesitate. Once you get a bullish candle, then that is, you're off to the races, and it hits. So there's 100 pips there, there's 100 pips there, and there's another one here, as you can see. So this is what I posted into the VIP room and the gold signal room. So as the price came down, it's achieving lower lows into convergence, which is important. I often talk about that. So the convergence is into the trend line. So, and also note that the stochastics oversold as well, which usually indicates a move is going to happen imminently. So let's wind this forward, and didn't quite happen as quickly as that, but nonetheless a good trade nonetheless. What did that take? 5, 10, 15 minutes to make 100 pips. So look out for that. It's a really fantastic way to trade, especially with gold. It can happen with anything, of course. So gold now, where is it? 23.48, hesitating, doesn't really know where to go. We've got negative divergence. So there's the divergence, and there's the red line there. So you don't really want to be long this. The other thing to note on the 30-minute chart, let's go there. We've got an outside bar. The outside bars are really good for exits. You don't want to be long this now. And down here, you don't want to be short that. You don't want to be long there. You don't want to be short there. So that's a fantastic way, very reliable. Does repaint a little bit, but most of the time it's really, really good information. So welcome to the full market analysis. Very few parabolic trends to talk about, and that is typical of a non-farm payroll week. So we've got US Swiss to the downside, confirmed, and nothing much else. We've got Swiss franc futures to the upside, hesitating a little bit, but nonetheless all the buys are in, broken structure, etc. So that's what we want to see. Everything's green, therefore this is highly likely to continue up. What that means in terms of correlation, this means that the Swiss pairs will be going down. Okay, and so we do expect this further upside momentum to continue into the near future. Now the US Swiss is parabolic. All the sellers are in. We have confirmation. We've done well on the shorts on this one. You can move your stop if you're trailing this to 89.88. But what's happening at the moment is now forming a wave 4 situation on the daily chart. So this could mean that the dollar is going to go up. And as we can see from the dollar, we're not interested in this because it's a mess, to be honest. But we can see that the US, the DXY, is now holding on to this support area here into convergence, but there's no action, of course, while we wait for the NFP. The interesting thing about this, we've got positive divergence coming into this price. So I do expect it to go to 106.65, maybe into the start of this being Friday, if we get the data out, which is going to drive the dollar higher. So what that means in terms of the US Swiss, if dollar goes up, then this will go up as well. So we are looking for anything to go up on the price action charts if that is the case after Friday. The only other one which is parabolic, unless you can see, any of you guys with the advanced pro charts can see anything new, then we can see that the Euro New Zealand is down into a parabolic trend, hit our target 176.43, heading for 174.59. However, we can see that it's holding on to this trend line here, long-term trend line, and so therefore we could see this price bounce any moment. So the price action charts may be quite relevant in this case. So let's dive into the price action charts, and been a few movements today, but it's a very strange day today actually. Not much going on at all, but maybe everyone's waiting for the non-farm payroll. Well, I wanted to show this. We got stopped out on the US Swiss minus 21 pips. So what? We banked 300 on gold. So it doesn't really matter. Completely insignificant. Your stops should be completely insignificant. Your account will not be dented by them because they're very small compared to your profits, and that's the key to your success. Let me show you the US Swiss on the price action charts, and as you can see, what tends to happen is once the price breaks down into a parabolic trend, you get these instances where the price comes back up into liquidity zone. So price breaks down, comes up, down, comes up, there, and there. Now, of course, eventually, like anything, it's going to run out of steam, and eventually you're going to get stopped out. So let's have a look at that from a closer perspective in terms of where your entries are. And one of the questions Ron was asking, where do I place my stop? Do I leave it as is, or do I trail it? Very good question. And one, I tend to leave mine where they are, generally speaking. But once you get the breakdown, you can use the 20 SMA as a trailing stop, especially if it's moving and motoring quite a lot. Then you can actually just lock in profits along the way. If you don't have a target, that's a great way to do it. Now, of course, as you've seen on the 4-hour chart, the price comes back up into liquidity and hits the pivot line and breaks down again. You can wait for it's subjective, but nonetheless, you can wait for the breakdown below the 20 SMA, go for 2 to 1, or you can get in on the very early point on the liquidity zone. My preference is to get in early, but that's a personal choice. So as the price comes down, it hits our target by the next day, but you've got another trading opportunity here as the price comes back up into liquidity, and then you get a liquidity grab, as they call it. So 2 of our targets were taken here, and away it goes again. This didn't come in as deep, and there is divergence here as well. So again, it is subjective. I'll take every trade. I'm not bothered because I lose 20 pips and I gain 80 and I gain 66. Doesn't really matter. By losing 20 pips, it's neither here nor there. So let's go into a few trades, trading opportunities, and explain a little bit about what's going on in the price action charts. So let's talk about price action in terms of exhaustion phases, wave 5s, which is a bit more technical than maybe normal because the trend is an easy situation to see. We can show you those on the price action charts. But when you've got a wave 5 situation, it's a little bit more tricky. And for instance, we can say that the wave 5 on the euro yen is continuing, pound yen as well, but there's going to be opportunities to get into these again, and I'll show you how that works. So what I do, I tend to grab a regression channel, just join up the dots somewhere around there, and you can extend that. It's easier seen on the 30-minute chart. You can see it's achieving lower lows, so this means it's likely to continue to achieve lower highs and lower highs and so on. I'll put a Fibonacci retracement tool on here if you haven't used one of these before. Let's take this off. And all you do is simply grab the Fibonacci tool here, Fib retracement, left click on the top to the bottom, and it gives you the areas of interest or convergence. Now it's not quite the same. I prefer to see this price hitting the trend line here, but you can see the direction that it's going. So there's a couple of things to point out. First of all, the 618% is of interest because that's usually the end of the pullback. And let's just highlight a couple of other areas. So for instance here, that support which became resistance is resistance right now, so that's live, and the price is coming into liquidity. So this is highly likely to fall down. You don't need to draw lines because it's all done for you. The price action charts, it gives you the liquidity zones. So you have a couple of events happening at the same time. Fibonacci retracement up to 618 is usually the extension. There's an 80% up there as well, so price could have gone up there, but it didn't. It's failed. So the entry point, up to you, is either at the point of liquidity, so you're trading with the big dogs, a little bit brave because it might feel like you're getting in too soon and it might just blip up. But so what? You've got a 33 pip stop. So what? You've got a 173 pip target. Massive risk to reward. So if you're risking 2%, you're going to bank 10. That's a nice reward. So the other thing to bear in mind, which is happening right now, and as you have seen in the past, when the price moves below the 20 SMA and finishes below it, that's highly indicative of a continuation of that move. And then, of course, you can move or stop if you want to with the 20 SMA. If you want to, or just allow it go to target. That's what I would do. Similar situation for the pound yen. We had a fantastic week on the pound yen. Congratulations if you traded it. Nice profit there, nice profit there. And we can see something's happening as well here. There is convergence. It might not be as clear as normal. This is a wave 5 again. So you're not looking at trending tools. You're looking at price action tools. So negative divergence, number 1, is fantastic. We like to see that. We'd like to see price overbought in these areas, which it is, despite it going sideways at the moment. But it's not converging with the trend line, which I prefer. Clearly, it's a much better instant decision. However, it's come up to 618%, 199.16, and then on to 80%, 199.71, and failed to go any higher, and now is achieving lower highs in these areas. So we can probably safely say that this is going to go down, back down to here. So once the price moves down below this area here, below this 20 SMA, then we can actually put a lovely 2-to-1 risk to reward on this again, probably in the next hour or so. So we've got a fresh move on the Euro Aussie. Hopefully you've got the signal. Not doing much at the moment. When you find that volumes are low, as they seem to be at the moment, then the miners tend to have even lower volume. So just be aware of that. I just want to cover this. We can see that the price is starting to achieve the stepping stone effect. So this is an early move up to 164.71. And so therefore we can expect further upside momentum. Let's have a look at the 30-minute chart. We've got a lovely trending situation here with divergence on this here, and the price come into liquidity at 163.29 and price goes up. Now you can wait for the price to move up into this area, which is sometimes sensible. However, getting in at this point is probably a good idea after divergence, because liquidity will drive the price much higher. So we got a trade on this up to 164.69, target 61.8% Fibonacci extension. So it's going to be slow, but nonetheless, it looks like a good trade. And thanks to Laurie for the heads up. So one of the things about having the price action charts is you can make your own decisions. You won't need me anymore, but if you want clarity and confirmation and signals for a year with 12-month support, VIP membership included, of course, then it's a great package. So let's cover the Swiss francs now, because just remind you, this is one of the red hot ones to go for, because we have a situation where the Swiss franc is strong, or has been strong. This drives the price down. We've seen a positive divergence there now on the lower time frame. It's weakened today, but it's going to go strong tomorrow. So be aware of that. And let's cover the Swiss pairs now. So New Zealand Swiss. So this, when you get this situation where you have the breakdown, it's so much easier to trade, isn't it? As you can see, once it breaks big time. You make a lot of money. When you get consolidation and it doesn't know where to go, then it's a little bit hazy, I guess, is the way to see it. But the fact that the Swiss franc futures is getting ready for a big rally indicates there's going to be some move downwards, as indicated in the VIP room. So have a look at this into liquidity. So this is convergence, as good as it gets, really. So you can trade this now if you want to. Let's do the maths. And you're risking very little indeed. 7 pips. Okay, but there's going to be a big move south anyway. So this is a fantastic sniper trade if you want to get in. Negative divergence, as indicated on the price action charts, gets you in with a very tight stop. Make it 10. Should we make it 10? Seems a bit silly, I know, but nonetheless, it's a fantastic trade. Now, the alternative, of course, is to get into the trade once it breaks down. So once you see that this is going on, we can go to the 4-hour chart, and we can see the stepping stone effect, can't we? So as it goes up, as it comes down, this is going up now. It's producing higher highs, but I'm not convinced of it with the way that the futures contracts are. Let's do a there you go. So we can see now that the price is hitting this major resistance area now. Despite this, we do have positive divergence, but sometimes positive divergence, or any kind of divergence, is simply end of momentum, or a slow down in momentum before it continues the trend. So this is still in a wave 5 downwards. So we don't want to be tricked into going long this, which is what the market is trying to do. So once we know that, we can see that the price is highly likely to start to fall down, despite the trend, if you like. This is in a wave 5. So once we get into this, we can just, 10 pips is neither here nor there, is it, in terms of trading. And the other thing you can do is wait for the price to move down below the 20 SMA, which is a fantastic tool for that. So once it breaks down, away it goes. So it's likely to be in the morning now. So just wait for that. Similar with the Aussie Swiss, of course, they tend to do the same thing. So, but I suspect what's going to happen in the next few hours, we're going to get price coming up into liquidity and convergence, highly powerful. So look out for that. I may kick this in the next hour or so. So look out for that in the Forex signal group. What else? Euro Swiss. I was still in it. Happy days. So again, it's coming into convergence. The Swiss franc futures is looking like it's ready to rock and roll. So this will take this down to target. Canadian Swiss. Well, there was news. Canada reduced their interest rates. One of the first countries to do that. There's going to be a string of interest rate cuts in the next month or so. So you're going to see a rally in the stock market. So they're going to be trending very shortly. Don't know how Bitcoin's doing, by the way. Oh, we'll cover Bitcoin. That's another fantastic trade going live. So Canadian Swiss, look out for that. I wouldn't trade them all. Not necessary. Pound Swiss was still in this. Happy days, coming into convergence. So another trade possible. Again, waiting for the price to move down and change character below the 20 SMA is a good idea if you like that kind of thing. Let's go to Bitcoin. Let's see what's going on there. Yep, as I mentioned, we had a break yesterday. I put this in, and I've got it's quite a big target, 80,000. It's going to go higher than that, so you can extend it if you want to. Make it 90,000. For me, Bitcoin wallets are the best way to do this because the brokers require very high margins sometimes, well, all the time. So just be aware of that. But you can see the breakout on the price action chart. Nice stepping stone effect as well. And so it's highly likely to continue. You can control it, of course. You can, as the time goes on, you can move your stop to here to break even if you want to. I wouldn't bother. Just buy Bitcoin. This is what gold looks like on the price action charts. You can mix and match. Totally up to you what your preference is. You can go to the gold software, which tells you when to buy and when not to buy. This, you don't want to be buying it here. You can see that there is going to be a correction of some sort in the next few hours. Well, we've got 300 pips. We don't mind what it does now, to be honest. So what else? Bitcoin's doing well. Gold is doing well. The US dollar is completely sideways, of course. We have to wait until Friday afternoon before we look at that, to be honest. As I mentioned at the weekend, dollar was always going to be sideways this week, and there's not many opportunities to be had. So just to give you the heads up, look out for the Swiss franc pairs. They're going down in the next few hours, probably early tomorrow morning, and the yens are going to start to be moving down very shortly. Oh, there you go. You can sell euro yen now if you wish. Stop 170.17, target 168.10. Let's have a look at the Swiss yen. That's mixed. Not ready yet. Not ready yet. Not ready yet. Easy, isn't it? Have a great day.